Hey guys, so in this video, I'm gonna share with you my investment plans for 2024 going towards next year. I know we're already in the middle of the year and my strategy of investing has pretty much remained the same since last year, but now I've come up with an update of my new investment plan. But before that, I want you all to know that I am just an entertainer, so do not take anything I say too seriously.
Trust me, I won't.
Looking back, I began my investment journey in 2019 when I first got into index funds. After reading the book Unshakable by Tony Robbins, I started to invest £100 a month into Vanguard, S&P 500 and the FTSE 100. Throughout the years leading up to now, I've changed my investment strategy. I am no longer investing in index funds from Vanguard simply because I realized how unprofitable it is holding such instruments, whereas there are other asset classes out there that gives better returns in a shorter time frame. The S&P 500 gives you a return of 20% on average based on the last 5 years, which is fine, but I want more.
Give me one more.
Okay.
I want to be rich at a younger age than when I'm old and grey. So, investing in index funds or ETFs and multiple individual stocks, diversifying to reduce the risk, just isn't gonna give me what I want. You were told that by diversifying, you are reducing the chances of your portfolio taking a significant hit. Because if, for example, the tech market goes down, your gold will stabilize your portfolio from a crash. So, no longer am I diversifying. I came to realize that when you invest 100 different stocks, your investment isn't necessarily gonna grow because all these unnecessary instruments are weighing your portfolio down. Before I continue, I'd appreciate you leave a like if you're learning something of value and subscribe to show your support. You can always change your mind later.
Yes!
I argue that by diversifying doesn't necessarily make an investor rich in a short amount of time. It takes a small targeted market for that to happen. When you take a look at Warren Buffett, the greatest investor of all times, right? You'll come to realize that when he diversified his portfolio since 1965, 50 years later in 2015, his net worth was over $67 billion. Wow, right? But after he invested in Apple in 2016, in just 5 years, his Apple net worth was over $120 billion. That's 2 times more than all his other stocks combined in just a short amount of time. This proves that by diversifying, you aren't necessarily gonna get rich sooner than if you had just focused your attention on one particular stock or asset. More specifically, a growth stock. In this case, it was Apple. Warren Buffett could have made so much more had he invested in Apple sooner, but he was really against Apple for a long time. This goes the same with a lot of tech stocks, before he decided to get in on it in 2016.
We own 5.5% or a little over % of Apple. It's probably the best business I know in the world.
What is that Apple stock that Warren missed out that we can all get in on to this day? It has to be an asset that hedges against inflation, that is scarce and cannot be manipulated in numbers. It needs to be global, that isn't tied to one location so that it isn't limited for adaptation to everyone. And it must have a secured network, making it reliable and resistant to censorship. All these factors lead to high growth potential and low risk reward ratio.
I'll be the judge of that.
No.
One would argue that gold is a good investment. The thing about gold is that it has been a good idea for the past 5,000 years for humanity. But the problem is that gold miners produce 2% more gold every year. That's just like the government taxing you 2% every year for your property. This means that over 30 years, the value of gold gets cut in half because there's more and more of it around. So if you hold onto gold for 100 years, its value would be halved twice. The other problem is that gold will get stolen by a criminal, such as a politician that disagrees with you. And the third problem is that gold is a property that you have to put in a vault. When it's in a vault, you rely on a third party that can then hypothecate and rehypothecate it. In other words, they're selling a lot more gold certificates than what they actually have real gold in their vaults. By doing this and selling without having the gold to back it up, they're making it seem like there's plenty of gold available, which pushes the price down.
Hey, you didn't know that?
Yeah, you didn't know that?
When there's abundance of supply, it becomes less valuable because it's not rare anymore. And the catch is, if you think you own gold through these certificates, you might not be able to get it when you ask for gold. So even if you think you have gold through these papers, you can't actually hold it.
And give me my goddamn gold!
No way.
What about properties? I am diving into investment properties this year. However, after analyzing its strengths and weaknesses, I came to realize how vulnerable it can be. A house was never made to be an investment. It is just a big liability for the most part.
So that's why your banker says your house is an asset. I'm not saying it's not lying to you, it's just saying it's not whose asset it is. It's their asset, you know? And the way you know that, again, is assets put money in your pockets and liabilities what? Take money from your pocket.
1. High initial cost.
Oh no!
Purchasing a property requires a 25% down payment when you get a mortgage, which often means you'll be spending significantly more than if you were to buy to live in the house. And not to forget, if you aren't making a certain amount of money per year, the bank will either decline you or you pay higher interest rates, which will stunt your potential rental income. 2. Legal fees. There's a lot of additional expenses such as solicitor fees, inspection fees, stamp duty, insurance, letting agent fees, gas, energy and electric certificates. And if necessary, to get the best interest rates for a mortgage, you may even have to pay for a mortgage advisor. This can all add up to around £10,000 more on top of the down payment for the house.
Are you stealing my money?
Guess so.
Wait a moment!
3. Ongoing expenses. This could be managing the tenants, where there may be periods where there is no tenants, and potentially you have bad tenants who damages the property or aren't paying their rent, and the cost of new tenant turnovers to the house. And I haven't even mentioned taxes. For every payment you receive from your rental income, you are required to pay tax. In UK, you have a personal allowance of £12,570 per year where you don't have to pay taxes. After you make that much, you pay 20% of excess money up until £50,000, and the tax just gets bigger and bigger the more money you make.
Teach your children about tax. Eat 30% of their ice cream.
Ice cream so good.
Shut your mouth or I will shit in it.
Although, you still made money on a monthly basis, so property investment isn't the worst. But I have something else in mind. What if I tell you there is an asset that can significantly grow your portfolio within 5 years, and you won't even have to pay capital gain tax on it? Would you believe me if this shit exists?
Tell me more.
It beats fiat currencies, index funds and ETFs. It beats individual stocks, real estate and gold. 1. It is the most secured network invented in the world because it does not rely on a centralized control where authorities can halt, freeze or ban its operation. 2. In terms of operation per second, the asset is 5,000 times more powerful than the world's most powerful supercomputer. The network is ever growing and it outperforms every other major computer network in the world, a network larger than the combined size of the clouds that Amazon, Google and Microsoft have built over the last 15 to 20 years. 3. Hedges against inflation. Unlike fiat currencies where it loses its value over time due to the money supply increasing, this asset has a fixed supply, which means the more people invest in it, the harder it will be to acquire it, the rarer it becomes. When it's rare, it goes up in value. Like gold, it can also be used as a means of transactions, sending money from one person to another.
I think I know what you mean.
So, what is this asset that outperforms every other asset classes year over year? It is the hardest form of money ever created. It had an immaculate conception where its success cannot be replicated again. There is no second best. It is no other than Bitcoin.
Bitcoin. Bitcoin. Bitcoin. I see Bitcoin.
You have to understand, Bitcoin is nothing like Ethereum, Cardano, XRP, Shiba Inu, and all these other altcoins. It grew under the superstition of major corporations with big money, meaning there were no early adapters or insiders getting their hands on this before anyone. There was never any pre-mining in Bitcoin. Pre-mine is when the developers get a large portion of the coin before it is released to the public. That is what Ethereum is. This is why Ethereum was never a commodity. It is a security, which means it is no different than a tech company like Facebook. Ethereum developers enrich themselves first from this pre-mine before dumping their crypto on their investors. This is not what Bitcoin is. Bitcoin didn't even have a price tag on it when it was released to the world.
Are you serious?
Satoshi Nakamoto, the developer of Bitcoin, posted in his white papers what it's all about. It was made for a way to transfer digital currency from one person to another. And the best part is, anyone can get their hands on this. From the day it was released, anyone with a laptop could have mined Bitcoin, and this is what Satoshi Nakamoto did for a year before he mysteriously vanished. Bitcoin was never pre-mined. There were no early developers that got Bitcoin first before it was released to the public. It was only until 9 months after Bitcoin was released did it then get a price tag. This is why it's an immaculate conception. It cannot be truly replicated by any altcoins. Others have tried. You have Litecoin, Bitcoin Cash, Ethereum Classic, all of which are failed forks of Bitcoin.
A fan, it's kind of annoying, but it's the sound of money.
Some would argue that Satoshi could just dump all his Bitcoin on his investors. Unlikely. The best thing about Bitcoin is that every transactions made within the blockchain is all transparent. You and I can see every peer-to-peer transactions made since the beginning of its time. Which means we can all see Satoshi Nakamoto's wallet and find that he has never moved his Bitcoin from his wallets ever. His coins remained untouched since they were created.
The only time Satoshi did move his Bitcoin was when he was testing the protocol. He sent 10 Bitcoins to Hal Finney in January 12, 2009. The time Bitcoin didn't even have a price tag.
Now compare that with Ethereum developers and other altcoins. These developers are constantly enriching themselves by selling a stake of their coins on their investors.
We'll go our cathedral. We must coordinate. But we ain't no cathedral. No one subordinate.
Where are your balls? Hiding inside you?
Oh, but you have to pay taxes on Bitcoin. Not if you keep your Bitcoins in the blockchain. And not if you're in a tax-free country where you don't pay any capital gain tax. Otherwise, the alternative to Bitcoin where you don't pay taxes, this only applies to UK investors, is by investing in stocks that hold Bitcoin as their treasury in your ISA. In other words, if a public company owns a lot of Bitcoin and their share price moves with the price of Bitcoin, then you're essentially investing in Bitcoin without owning the underlying asset, similar to the spot Bitcoin ETF in America. Since the spot Bitcoin ETF isn't available in UK yet, the alternative to that is in fact this company called MicroStrategy. They are a company that hold Bitcoin as their treasury. If you can hold MicroStrategy in your ISA, then you won't ever have to pay taxes on your capital gains. And the best part about this stock is that it's pretty much a leverage play to Bitcoin. So if Bitcoin goes up 1%, MicroStrategy goes up 2%. If Bitcoin goes up 5%, MicroStrategy goes up 10%.
And since it's not a leveraged ETF, you won't be losing out on the compounding effect over time.
It's perfect. Far better than the spot Bitcoin ETFs.
You've obviously done your research.
So this is how I'm investing in 2024. I am going all in on Bitcoin from this day on, using MicroStrategy in my ISA to speed up my portfolio growth. Plus, any capital gains will be tax-free.
People came to the United States for two things, property and freedom. And Bitcoin represents property and freedom to 8 billion people. Satoshi created a computer program that would run in a distributed fashion on computers all around the earth. And that program creates 21 million virtual coins in cyberspace. If you wanted to save $1,000 and you wanted to have it beyond the reach of a company, a CEO, a government, a bank, and you wanted to have personal custody of it, you could have that with Bitcoin. Bitcoin is a technical solution to give 8 billion people property rights. And we've never had that in the history of the human race.
You have my utmost respect.
Listen, if you aren't willing to own it for 10 years, don't even think about owning it for 10 minutes. If you learned something of value, I'd appreciate you leave a like and subscribe to Clyde the Vera. That is my name. Be the best and fuck the rest.